Hi guys, back again for another trade execution video on ETH. Sorry, I haven't updated this channel in a minute. I'm going to stop doing these trade execution videos based on the date taking the trade, as I'm a bit busier these days. So yeah, I might be basically logging in trades that happened a week or two ago. As a result, I'm basically just going to name what the sort of trade type was. Here we have 1 hour divergence plus PO3 or power of 3. So yeah, let's get into it. Right, okay, so we're currently looking at ETH as it stands today, but this trade was taken a couple of weeks ago, so let's dig into the rationale behind the trade, the execution, etc., and of course the management of the trade. So essentially the initial trigger was a PO3, so important to mark this sort of range and its parameters on the chart first off, okay? What do I mean by PO3? It's power of 3. Essentially, we have this sort of range-bound environment. We were range-bound here for about 55 days, I believe. Yeah, 54 days, 8 hours, there you go. So we were range-bound, and then, so basically you have the range, you have the break down or the break up if it were on the flip side. That's then a failed breakdown, deviation, close back inside the range, move up with haste, and then pierce up to the other side, which was the range high, okay? So this was a trade I waited patiently for, had my eyes on for some time, and I'm not talking about just sort of thinking about it's happening when we get down here, okay? This whole time we were range bound. I'm looking for that clear deviation, signs that we are deviating when it occurs, etc. Why? Because primarily in this market, I want to be long. I want to be long positioned. Okay, we can see that we're generally in an uptrend. So we had the move into the range was from the lows. Okay, so we're moving in to the upside, ranging, and then what we want to see is that sort of deviation, sweep of the lows. What happens essentially is as we deviate and start closing under, you'll see a shit ton of short positions opening as well, okay? Because this is obviously a confirmed breakout for many traders. So you've basically got a lot of shorters that are opening up fresh positions as we break down, okay? And as this then reverts, deviates, closes back above, they are trapped in their positions. That then unwinds, adds fuel to the fire, and you can see as they all panic close, you can see this really aggressive move to the upside occur, okay? So yeah, as I said, my eyes were on this type of play, deviation of the range, and then that sort of push up that we saw. But in terms of actual execution, I wasn't waiting for a range reclaim, okay, by any means. If you were, then you're potentially taking this candle. If you wanted real confirmation, you were taking this candle. And by doing so, if you had your stop at the lows, we're talking about 9.5%, not ideal. Okay, so if we just flick down to the hourly here, we can really get into why the trade was taken and how it was taken with high conviction, okay? So for those of you that have studied my previous videos in the trading technical analysis series, I'm sure your eyes are all turned on to what my eyes are turned on to here, which is an extremely clean bullish divergence, okay? I mean, this is really kind of as textbook as it comes, guys. You can see both peaks clearly in overextension here. You have the AO confluence here. And then in terms of the actual structure of the candle bodies itself, we've got this really, really super clean arc, okay? Now, I essentially took 3 installments on this trade, okay? So my first installment was on this really small candle body close here. I think I took 20% there, a further 40% here, and then the remaining 40% as we closed. I think it was just before we sort of closed this candle here, okay? So that sort of third installment was probably around this mark here, okay? So let's say we were sort of averaging something, I think it was around here, just underneath these bodies here. So this was our entry point. We then had our stop at the lows, of course. Why? Because, well, essentially the divergence has confirmed itself. Okay, as soon as we start closing green and then following up on that green, okay, and we're getting momentum to the upside, then the pivot's clearly in play. I mean, you can really use anything you want to sort of ascertain as and when the divergence should be in clear play out. You can put a trend line here. You can just say, you know, that we're engulfing these candles here, whatever it is. As soon as I see that sort of thrust back in the opposite direction, that sort of slingshot where price is, you know, teetering off momentum on the sell side, and then boom, you get those buyers coming in and you get the impulse to the upside. Then I've got the full confirmation to be in the trade, okay? As always, guys, I'm usually scaling into trades in installments. But yeah, with an entry roughly around the sort of 1400s here, that's what the trade looked like, okay? Now, just a quick hop over to Aggr so we can, of course, look at the aggregated delta dynamics. So again, further confidence to the trade. I mean, this really was a 10-10 setup, guys. So obviously you've got this really clean divergence structure in here, but then you also have this first impulse to the downside, which produced a huge amount of negative delta, both across the spot and the perp markets. And usually what we see on the divs, guys, is as it goes to the second leg, we're just going to see some delta produced, okay? It's always going to be less, or usually anyway, than the first leg down. The first leg down is a sort of strike down, which is obviously more aggressive. You can see the size of this candle here. And then we'll basically teeter off, and as that sort of sell side momentum starts to wane, we produce a little bit more delta, and yeah, that's sort of, you know, that's normal to see. I don't want you guys to think that we're looking for, you know, especially extraordinary amount of delta on that second leg. Essentially, what we've needed to see in terms of the delta has already happened on this first leg down, okay? Now we're just looking for price action, and we're looking for candle bodies of the opposing color to confirm that div, all right? So that's basically just a note on order flow and the delta produced, okay? So yeah, back to our price chart, and we're back on the 4 hour here, okay? So just wanted to essentially map out what the trade looked like, okay? So we had our stop at the lows, and you know, why do we have our stop at the lows? Essentially because, you know, once you feel like the divergence has confirmed itself, that should be it. Essentially, you're taking the trade. Essentially, the trigger's based on the div, and the div is essentially invalidated. It should not be going down to hit those lows again and sweep those lows again. That's not what you want to be seeing, guys. Okay, so the stop was hard and at the lows, and essentially just ran this all the way up. Okay, nice and simple to the range highs. I did TP a little bit at the mids here, at this sort of this SR level and the EQ, but to be honest, guys, it really wasn't very much of a take profit. Reason being is because you know, essentially once we had this confirmation candle here on the deviation back inside the range, and you know, also an absence of any real supply. Okay, so this, I wasn't worried about any of this in particular in terms of liquidity to sort of suppress the move to the upside. So I did take TP a little bit here, but it was essentially, I think it was just 10% TP to sort of pay for the trade. Because, you know, once we'd had that deviation confirmation, of course, you know, taking the entry underneath this sort of range low here is a lot more risky, essentially. And at that point, we have a lot less conviction. But as soon as we do start breaking back into the range, that PO3 is confirmed. And on that basis, you know, we have a high certainty, high conviction that we think we're going to reach the other side of the range, being the range highs. Okay, so I had some limit asks up here at the top. Took me fully out of the position, and yeah, you can see it wasn't a 6.8. If we just adjust that to see the proper being around the 1400s here. We've got a 10.5 hour trade on our hands, okay? Also smacked this one with size, so it was a huge winner for me this year. Reason being is because, you know, this one was essentially just handed to me on a platter, guys. You had, you know, everything lined up, okay? So we had this range-bound environment for 55 days. We scorched down aggressively, creating this, you know, absence of liquidity, inefficiency, void, whatever you want to call it. Then when we came down, we started structuring an hourly bullish divergence, which really was as cleanly structured. You know, I couldn't have drawn one cleaner myself. Alongside that, we had the high negative delta produced, and yeah, we also had Bitcoin Confluence. So let me just hop over to BTC quickly, so I can also just quickly talk you through my thought process on that side. Okay, so as you can see, we have this 19798 level. What is that red level on the chart? Okay, it's basically the previous bull run's all-time high. So an extremely critical level on the charts, and then you can see, you know, as that sort of hourly ETH bull div is printing itself, we also have the same structure on BTC. Okay, not quite as clean, okay, in terms of its arc, but we also have, you know, double confirmation, both peaks in overextension, and although it looks like we lose that level, you know, we start closing back above it, holding as support, and basically because we were basically hitting into this this key level for me, we had really strong BTC Confluence. And you know, I just want to make a quick note here, guys, because this is something that I've also not struggled with, but recently anyway, but back in the day I did, and that's the fact that, you know, if you're looking at this here, right, and you say we've got this BTC Confluence, etc., but then we actually lose that level, start closing underneath. You know, you have to think about this in a much sort of broader sense. Don't get lost in the lower time frames. Just because you see an hourly close underneath, it doesn't really mean anything, to be honest, because, you know, as you can see, we do so, we come back up, we close above, we hold this level twice, off we go, and then, you know, if you flick to the slightly higher time frames, like the 12-hour, you can see that we're basically just hitting that level, closing at the level, and absolute moonshot from there. Okay, so there you go, guys. We've covered off, you know, a really simple trade, a swing trade which requires a hell of a lot of patience to wait for, you know, which I went through personally. And then, you know, when you get those setups with that sort of confirmation and all those signals, and you've got that confluence across both BTC and ETH, then, you know, those are the trades that make your year, guys. These are the trades you need to be waiting for, because, you know, when they come around, smack them with as much size and as much risk as you can sleep on, essentially. And yeah, they can be absolute home runs that make up, you know, a huge amount of your P&L for the year. Okay. Okay, guys, so I hope you enjoyed it. I hope you garnered some useful insights as per. And yeah, we'll be sure to touch in soon, hopefully with some more trade reviews.